Welcome to the new video series of Should I Buy Blank? In this video series, we're going to do some fundamental research, some technical analysis, and we're going to dive into the nitty-gritty, put all the information in an Excel worksheet and see if at the end it's worth us putting our money into it, and if it's worth for you guys to do some more due diligence and see if you guys find value in it. So every week, we're going to be bumping out a new ticker, going over the details and looking at the fundamentals, looking at the research and seeing if it's worth something that you might want to start investing in with the markets being pulled back as much as they have. So without further ado, go ahead and smash that like button, subscribe so you can catch all the other videos, and let's dive right into it. So let's dive right in and do some research. In my last videos, I talked about how you guys can use MARKETSMITH to get all the information that you need. In my most recent video about how to read financials, I talked about what formulas you guys need. And in today's video, we're going to combine everything, put it together, and I have a little Excel sheet that I've made that I will be releasing for you guys only if you guys smash the like button and get this thing to about 150 likes and comment down below telling me yes, you want the Excel sheet. So this Excel sheet just makes everything very simple, and I'll provide it to you guys free of charge, of course, so you guys don't have to pay for it, but it makes everything a lot easier. So in this video, we're going to analyze Netflix, and in the oncoming series, we will analyze any of the tickers that you guys want, and I'll casually do stocks every week going forward. Okay, so we have our checklist. If you guys remember, in my last video, I've kind of inputted everything into an Excel worksheet here. You can see we have all our company names, stock price, market price, EPS, PE, all the debts, and everything we talked about in the last two videos. Okay, so we're going to start right here. The first company we're looking at is Netflix. Now, the beauty of this Excel sheet is going to pull up some information for you, so you don't really have to start, putting in too much information. Okay, so this right here is the PE. It's a little bit different from what MARKETSMITH says. MARKETSMITH has 20, and Google is telling us 21. That's great. EPS is 11.25. All right, so that's already pulled up for us here. Great. That's also good to know. And now we're going to check our return on equity. So return on equity, if you guys remember, it is right here. Okay, so return on equity is 38. So we're going to come up here and we're going to plug this in, 38. Perfect. And then we're going to keep moving on to the next category, total debt. So if you guys remember, how did we research total debt? We were going to jump into Yahoo and understand what their total debt was, right? So we're going to pull up Yahoo here. All right. We're going to jump into Netflix. Perfect. We're going to go to financials. We're going to jump into, we're going to jump into balance sheet. All right, so total debt, you're essentially looking at total liabilities. So total liabilities right here is 2873. We're going to put that right there. Bam. Total assets, we're going to put in, we have total assets right here. Bam, we're going to put that in there. Perfect. So the ratio is a 1.55, which means they could pay off their debts via their assets. All right, perfect. That's a good sign. Now we're going to look at current debt. All right. Now total debt is overall. Current debt, again, like we discussed last time, it is total of what needs to be paid off in the next 12 months. So current assets is right there. And then we have current liabilities, which is also debt. All right. So this is a little bit of an issue, not too far off. So that's something to consider right there. And then we're going to go jump into the income statement. So we have operating income, total operating income. Bam, we're going to put that right there. We got total revenue. Bam, we're going to put that right there. We're going to scooch over. Perfect. We're going to go back to Yahoo Finance here, and we're going to look at their cash flow. Okay, now we're looking at cash flow. Is the cash flow increasing? So it's a little bit of an up and down. All right, so in 2018, it was a loss. 2020 2019 was a loss, 2020 was a gain, 2021 was a slight loss, and the TTM trailing 12 months is a positive right now. So you got to understand that this company is a growth company. So they will oftentimes have negative cash flow. As they grow, they will end up into the positive side. And I think this has done a good job. We've gone from 3 million and now we're, either positive or break even. So in this regards, is cash flow increasing or decreasing? I would put down as increasing. All right. Now we want to jump back into MarketSmith and we want to take a look at how much percentage of this is owned by management. So here we can see management. It says that it is owned by 2%. So we're going to come here and put 2%. And then we want to see if the number of funds are increasing. Okay. So the number of funds, we can look at it at a few places actually. We can look at it right here on MarketSmith, number of funds, and we can also look at it right here. Okay, so let's take a look. September 2020, we had 2,800, 2,900, 3,000, 3,000, 31, 33, and then we've actually decreased this last summer. Okay, that's simply probably because of their last earnings report, but overall, in the last 1, 2, 3, 4, 5, 6, 7, 8, this thing has been increasing. So we'll put increasing here. Obviously, something to keep note of. Okay. So now, this Excel sheet is going to pump out, will it pass or fail? Okay. Now, the calculation is a very basic calculation. It doesn't do any back-end calculation to establish whether it's a pass or fail. It's really using the formula you have here. Okay. And what is it looking at? It's looking at the EPS. It's looking at the PE, the return on equity, the total debt to asset ratio, the current debt to asset ratio. It's looking at if the income statement balances, which in this regard it does. Remember, we were looking at for 15% and higher, which we got that here. Cash flow, is it increasing or decreasing? And funds, is it increasing or decreasing? So if most of this, over 65, 75% of them has been checked off, this will give us a pass. Okay, great. Now we know, we've established that this is something we want to invest in the long term. Okay. Now, if you go back to the video I made, it doesn't just end here. Just because the Excel sheet says it's something for you can invest in, doesn't mean it's the right company to invest in. You got to look at sentiment, what's happening in the world out there. You got to look at technicals, what's going on with the chart, what's happening with the chart, right? So in this day and age, you got to ask yourself, is Netflix going to come out on top when there are so many other streaming companies out there? Is this an industry that is starting to get polluted? Is this a industry that is going to continue to generate revenue? What is Netflix doing that's going to be different from every other streaming service out there? We have Disney Plus, we have Amazon, we have lots of even free services that are streaming that are out there. So is this something you want to invest in long term? Maybe there's better alternatives. Maybe this industry is not something you want to invest in. But in regards to the numbers and what's currently happening, everything is adding up, right? We have everything adds up. Balance sheets, it balances. We have cash flow, which is increasing. Funds are doing okay here. Everything adds up here, all right? So with that said, let's dive into the technicals. Of course, MarketSmith is going to give us that. We do have a beautiful, beautiful cup and handle here forming on Netflix, and we have a monstrous gap right above it. All right. If this isn't something you want to invest in the long term, at least it's something you can pay attention to if it gets above that resistance level for a little bit of a pocket play to the upside. Okay. Now, if it is something you want to invest in long term, then it's very basic. All you really got to do is establish a few support and resistance lines and see, where do you want to invest in this stock. So after that big last earnings report where we had a -6 EPS, surprise, they didn't beat, stock dropped, and we've kind of fluctuated and gone sideways here. So anywhere in this range, I would say if you're looking to invest in this in the long term, anywhere in this range would be a decent position to start at. Okay, your next range would have to be somewhere down here. Somewhere down here, and then under that you could take into consideration anywhere under the 50s. Okay. So again, if this makes sense to you, if you find value in it, and if you understand how the industry is, what they have going forward for them, how they're going to be any different than every other streaming service out there, then maybe it's something you want to invest in. Okay. Obviously, another thing that you can continue to take a look at is MarketSmith provides you a lot of other information that kind of help you with your decision making, right? You know, you can see their EPS growth rate has been 70%. You can take a look at their EPS rating that actually MarketSmith gives you, so it's a 90. So everything here is fairly good, but what is risky here is the amount of competition in this industry, and are they going to come out on top and be a leader in this industry? And that's where the question lies. All right, so again, this is our research on Netflix. In the coming videos, I will continue to do more. If you guys know what stock you want me to analyze, go ahead, drop the ticker down in the comments below. And if you guys want this Excel sheet, it's very easy. All you got to do is plug your information in, and at the end, it'll give you a pass or fail. If it does do that, if you guys do find value in it, go ahead, smash that like button. Let's get to around 100, 120 likes. Once you do that, I will release this for you guys, but make sure you also comment down below and let me know, say, yes, I do want the Excel, and I'll provide it for you guys. All right. So thank you for watching. Smash the like button, subscribe, because there'll be a million of these videos coming out, and we'll catch you on the next one.